Hey everyone, my name's Alex McGillivray. I'm the VP Corporate Controller here at Clio, which is a long-winded way of saying I'm sort of the top accountant, if you will. You can probably tell from my voice that I'm losing it. I've been attending a ton of the networking events the past few days, which is exactly where every company wants their accountant to be spending their time. So please bear with me here. Today, it's my great honor to be introducing our speaker, Jayden Doyé of Prestige Accounting. Jayden's going to be speaking to us all about how to achieve financial organization. Jayden's an incredible thought leader. He works at the intersection between finance, business, and the legal industry. He's a best-selling author. He runs an excellent podcast. I got the chance to have a drink with him a little earlier in the week and came away from it feeling like there's really nothing this guy can't do or doesn't already do. So if you would please join me in a round of applause for Jayden, and come on up. There. Whoops.
Good morning, ladies and gentlemen. How are we doing today? Let's try this again. Good morning, ladies and gentlemen. How are we doing today? That's what I like to hear. I'm not one of those speakers that just talk you to sleep and you're going to check your emails and all of that. This is going to be a fun, interactive talk. I know some of you don't like to talk about numbers, but I'm going to make it to the point where you guys like and understand the numbers at the end of my talk today, okay? By a show of hands, how many people in the room ideally want to achieve financial freedom? Raise them high, yes. And how many people, by a show of hands, can agree that reaching that financial freedom, you may need some assistance along the way? All right, just want to make sure that I have the right people in the room. There's a quote that I want you to write down. In order to achieve financial freedom, you must have financial organization. The person that said that quote was a #1 best-selling author, a podcaster, and his name was Jayden Doyé, CPA. All right, so today I'm going to talk about how to achieve financial organization in your firm. And for the agenda, we're going to talk about the importance of financial planning in your firm. We're going to talk about key financial metrics to track. We're going to talk about budgeting and cash flow management. And we're going to talk about the essential financial documents for internal retention. All right. Please have something ready to take notes because this will be a crash course. I'm going to give you a lot of information really quickly. And at the end, we will have a Q&A session. So please write down your questions as well so that I can answer those at the end of this presentation. So let's start with the importance of financial planning. First, I have a question for you. Why did we all start our businesses? Anybody want to answer? To make money. Wrong answer. No, to create impact. Yes, to make money, right? That is why we have to make sure that in addition to making the money, that we are organized with the money that we are making. So in doing so, the first thing that you want to do is make sure that you're setting clear financial goals. You're going to set short-term goals and long-term goals. Now, some coaches will say, you need to set your budget for 12 months for the whole year. I don't know how you all work, but the way my brain works, that's very difficult to do because businesses have ebbs and flows. You know, opportunities present themselves in the middle of the year. So realistically for me, I set long-term goals as far as how much revenue I would like to make. However, as far as budgeting is concerned, I like to do my budgeting quarterly. So about 12 weeks at a time. So that's what I mean by setting short-term goals. And we'll talk about budgeting and forecasting later in this presentation. You also want to make sure that your financial goals resonate with your firm's core values and mission. Does everybody have their core values and mission on their website? Do you have it memorized, or did you just pay a marketing company to do it for you? See, the core values and mission of your company have to actually mean something to you. And it has to resonate with your financial goals. What do I mean by that? Well, I have a theory that you can have there's two different types of firms. There's value firms and volume firms. If your average client value is less than $3,000, you most likely have a volume-based firm. And in order to have $1 million firm or a 7 or 8 figure firm, you have to have a large volume of clients in order to reach your financial goals. And if your financial goals are to have a 7 or 8 figure firm, then you have to bring in volume, right? And if your goal is not to have a volume-based firm, then those two things are not in alignment. So that is why your firm's mission and goals and core values must align with your financial goals. And you should do regular check-ins, reviews, and make changes to these goals. I say at least once a quarter. The next is resource allocation. We have to first be able to prioritize what expenditures we'll pay. I remember when I started my CPA firm, I started with no clients, very humble beginnings. I started my firm in my dining room with the table was $69 on Amazon. I had found a good sale. And then when I saw that it was missing a few screws, I figured out why it was so cheap. And I couldn't even afford the tax software that I needed when I first started my CPA firm 4 years ago. And I had to work out a deal with the software company to get on a payment plan. And there were a number of things that I knew that I needed in order to have a successful firm. Now I have $1 million firm, and in the beginning, I knew that there were things that I needed, and I had a whiteboard, and I wrote all the things down that I couldn't afford, and I kept working hard to reach certain revenue goals. And as I reached those revenue milestones, I would then get those things and write it and then cross that thing off the list. It's some sense of satisfaction that you get when you cross something off the list. You guys know what I'm talking about? And so as we are financially planning for our firm, we have to prioritize what expenses we are going to pay first. Sometimes we can't afford all of the things that we want, but we need to make sure that we are paying for the things that we need. We also want to make sure that we're balancing growth and sustainability. You want to make sure that you're investing in your firm expansion while also ensuring that your firm's financial health is not compromised. And lastly, human resources. Deciding when to hire, offering competitive salaries so people actually stay, and managing overhead is very important when it comes to resource allocation. By a show of hands, how many people in here are solos? Keep your hands up, and keep your hands up if you're feeling burnt out sometimes. Yeah, so we need to hire some people so that we can lessen the load off of us. And in order to do that, we have to make sure that we are allocating resources appropriately. The next element is projection and forecasting. So there's 3 different elements to this. The first one is revenue projection. So in this, you are estimating potential revenue based off of your current cases that you have in your queue, historical data, and market trends. So historically, if your marketing efforts are showing that you're bringing in a new case every week and your average client value is $3,000 per client, then you can project what you will make if you keep the same marketing efforts over the next 12 weeks easily. If you double those efforts, then you can estimate that you will double your revenue. Now, when it comes to expense forecasting, this is where you're predicting future expenses and making sure that you will have the sufficient funds to cover these. So there's two things that I want you to write down. You have fixed cost and variable cost. The fixed ones are the ones that will be the same no matter what. No matter how many clients you get, the rent will be the same. Your landlord does not care if you get no new cases this month. That rent is due on the 1st, okay? But then you have variable costs where based off of production, these costs may fluctuate. So depending on how many staff members you have, depending on how many cases you have, that'll determine how many staff members you have. That'll determine how many users you need on Clio. And that's a variable cost. So these are things to think about as you're forecasting your expenses. And then we have scenario planning. This is where we're looking at the best case scenario, the average, and the worst case scenario. So you can plan for uncertainties. And on that note, we need to make sure that we have a rainy day fund. Now, by a show of hands, how many people in here practice personal injury? Okay, a few. And sometimes these cases take months to close, right? And some months, it's a dry season. You might not close any cases in the month of October, but guess what? Your employees still want to be paid. So we have to make sure that we have sufficient funds saved up to make sure that we can accommodate those expenses during those dry periods. We have to make sure that we have sufficient savings to make sure that we can pay for unforeseen case costs, emergencies, unplanned infrastructure needs, ensuring that whatever unexpected comes about, you can pay for it. So this is why we want to make sure that we are setting aside some of our profits into a savings account so that we can cover those uncertainties. Now, let's move on to key financial metrics to track. The first one I want you to write is client acquisition costs. This is the cost associated with acquiring a new client. Components comprise of advertising, marketing campaigns, consultations, things of that nature. This is important because it'll help you understand how much money is spent to obtain a new client, to actually assess the efficiency of marketing and outreach efforts. This will also help you figure out if the marketing efforts that you're putting out there are bringing in the big fish or the goldfish, okay? Because let's be real, sometimes we put all this money into fancy graphics and ads just to get little Nemos when, we could do like we did back in the day and actually go out and network and talk to people and land us some shark and good salmon, right? But if you're not calculating your client acquisition cost, then you won't know that. Now, there are many different ways to calculate this. I'll give you the most basic and easy way, okay? And accountants in the room, cover your ears, okay? Because I know that you probably have your own way, but okay, I'm just giving it to them basic, okay? So at the end of the year, you'll look at your profit and loss, and you'll look at the total that you have in your advertising, marketing, promotion line item. So you'll take that total, and then you'll also look at whatever system that you're using to document how many clients you've acquired over the year, and you will divide the cost by the number of new clients that you've acquired over those 12 months. And that'll give you the cost for every new client. Okay, super basic. There are more complicated ways to do it, but this will at least give you a roundabout number. Ideally, year after year, this number should go down because your marketing efforts should be more efficient as you grow your business. All right, moving on to case ROI. How many people, by show of hands, do flat fee? Hands, keep them up. And keep your hands up if you track time. Oh, okay. All right, so case ROI, we are calculating the case ROI. We're looking at the return on resources, both time and money invested into a case. So a lot of times people tell me, I'm contingency, I'm flat fee, I don't have to track time. Really? Let me tell you why you do, why you should, rather, so that we can calculate your case ROI. So in this, we're looking at how much, of course, direct expenses we have on a case and direct labor we have on a case, okay, versus the actual revenue that you generated from a case. And so over the course of a year, if we look at, I'll just give you an example, personal injury firm, they do a variety of different personal injury cases. And we are trying to be strategic with their marketing efforts for the next year. They want to be more profitable. And so in order to do that, we need to look at the case ROI. And so we're analyzing the various different cases that they've done over the year. And we see that the MVA, motor vehicle accident cases, that they get from a certain marketing source are getting them the lowest ROI, okay? They're getting the most leads from this one source, but they're getting the lowest ROI, meaning that their team are putting the most effort in. They're having to call for medical records over and over again. They're having to do all these negotiations and they're barely making a profit on these cases when they really could just focus on these bigger, more profitable cases, okay? Another reason why you want to also look at case ROI is because of bonus structure. This will also help you as a CEO look at the productivity of your staff. So let's say in this same case, you're a personal injury law firm owner, you have 2 attorneys, okay? And you look at the amount of time that attorney 1 is putting towards cases versus the amount of time that attorney 2 is putting towards cases. And you see that attorney 1 is able to put about half amount of time to MVA cases that attorney 2 does. And they're able to close out double the amount of cases that attorney 2 does. They have the same work experience and education. So on paper, they look the same. But when you actually calculate things, you see that this person is really not being productive. So this will help you as far as measuring productivity. And in a third example, if they were closer to being equal, this will help you as far as give them incentive to some type of bonus, okay? So let's go back to revenue per lawyer. By a show of hands, how many people in here practice family law? Wow, God bless you all. I don't know how you do it because I don't even want to hear my friends talk about their relationship drama, okay? So you guys do it for a living, so kudos to you. So revenue per lawyer is, when I'm working with family law attorneys specifically, this is really big. I mean, every lawyer, every law firm should use this metric, but family law in particular, because with family law, every industry has a different benchmark for revenue per lawyer. And pretty much this is your total revenue divided by the number of lawyers in the firm. And realistically, if you think that you can have a $2 million family law firm with one attorney, good luck. That person is going to go mad. Okay? So, we want to look at, as you're growing and as you're staffing, what does the revenue per lawyer look like in your firm? And sometimes a lot of family law attorneys have kind of said maybe like around $500,000 per attorney. They can manage that with and have a work-life balance, right? And that may be different in a personal injury or a litigation, but the revenue per lawyer will help you, compare where you are in comparison to your competitors. And this will also help you measure productivity and efficiency. This will help you figure out if you're overstaffed or understaffed, when it's time to hire, and when it might be time to crank up the marketing because we need to bring in more so that we don't push out too much money in labor costs and we don't have the revenue coming in to give us the profitability that we want. The next one that I want you to write down is operating margins. This is the percentage of total revenue that exceeds operational costs. This indicates the overall firm's profitability and financial health. This will help you identify areas of excessive spending or potential avenues of increased revenue. The next one is aging accounts receivable. By a show of hands, who gets happy when people owe them money? Right, nobody. Exactly. So aging accounts receivable, this represents the outstanding balances that's owed to the firm. Now, extended receivables can lead to cash flow issues, especially when you have already done a lot of the work and you have large balances, and the longer and longer and longer these accounts receivables age, the less likely, statistics show that the less likely you are to collect on these. And you have already budgeted your expenses based off of the money that you anticipated bringing in. And so if people aren't paying you what you're owed, then that's going to be a problem. And so strategies around speeding this up include streamlining your billing processes, enhancing client communication. Does anybody still mail bills out? Okay, a couple people, and some people don't want to admit it. It's fine, it's fine. Well, of course, you could do the email and portal and texting. A lot of people, especially for the younger audiences, those millennials. Oh wait, I'm a millennial, forgot. They love texting. So those are different ways that you can streamline your billing processes. And sometimes just having a conversation with someone, realistically, when people owe you money, they know they owe you money, okay? But sometimes they just don't want to have that. They don't know how to approach you. So if you approach them, not, aggressively try to work something out, then they're more likely to work something out with you. And also employing stricter payment terms. And depending on your jurisdiction, also consider withdrawing. And also depending on your jurisdiction, consider auto pay options, auto ACH. This is, instead of doing billing manually, this is a strategy that we've helped clients implement, is help collections, and it's helped speed up collections dramatically. All right, the next one is utilization rate. As you can see, I went to school for accounting, not for English, so yes, there is a typo. Utilization is the proportion of billable hours to a lawyer's total working hours. Okay? Again, billable hours to total working hours. Why is this important? Because this measures productivity. If you're paying someone $100,000 salary, you're expecting them to do a good amount of billable work, right? So in order to do that, in order to measure that, one of the numbers that we use is the utilization rate. And if you're seeing that someone that should be doing more billable work is spending a lot of time doing non-billable tasks, this could be an indicator that it's time to hire someone in an admin role, okay? And now that we live in a digital age, a lot of firms are now looking at hiring virtual assistants to handle a lot of the low-level admin work, so that they can have their actual lawyer staff focus on the billable work so that they can bring the money into the firm. The next one that you want to write down is realization rate. This represents the percentage of billable work that gets invoiced and eventually collected. The factors that impact this rate include write-offs, discounts, and unpaid invoices. So here we're looking at how much we're billing versus how much we're actually collecting. So things you want to think about, if you work in an hourly environment and you find yourself writing off a lot of time, why? Is it because team members need more training? Or could it be that people are lying about their time? No, because people don't lie, right? Well, something to think about. Discounts. What type of discounts are we giving? Why are we giving these discounts? Are we giving loyalty type of discounts? Are there incentives to giving discounts? Could discounts actually bring in more clients? Things to think about. Discounts on the surface seem like a bad thing, but could actually work in our favor if used appropriately. And then, of course, we have unpaid invoices. So why are these people not paying their bills? Is it because we sent them a $5,000 bill and we only bill once a month? So maybe we need to bill twice a month and bill in smaller increments so that our clients feel less of a hit when they receive that bill. Ways to improve your realization rate: timely follow-ups, better communication with clients, and enhancing your billing practices. Now let's talk about budget planning. This is the process where you're creating a plan of how you will spend the firm's money. So we talked about revenue forecast. We talked a little bit about fixed expenses earlier. We talked about variable expenses. And then we also have capital expenditures. You want to revisit your budget every quarter. So we're in the month of October now. So if you have a time machine, you can go back to September and do your fourth quarter budget. If not, it's okay, because December is around the corner and you should be doing your first quarter budget in December at the latest. Don't wait until January while you're in the quarter to do the budget for that quarter. Does that make sense? Okay. So things that people often miss when it comes to planning for their budget is they just throw a number out there. They say, we're going to make $100,000 this quarter. Where did that number come from? You just closed your eyes and you saw 100 and you wrote it down with no plan, right? So some things to think about when it comes to revenue forecasting. How many clients does it require you to meet that revenue threshold? So if your average client value is $10,000 a client, then it'll only take you 10 clients to reach $100,000 in the quarter. But the question then becomes, do those clients pay the full $10,000 in that quarter? Or do you offer payment plans that may extend out? That's where things get complicated. If you offer 6-month payment plans, then realistically, maybe on average, in a 3-month period, you may only collect half of that. You may only collect $5,000 or something along that line. So now, instead of planning for only 10 clients, we really need to get 20 clients in order to reach that $100,000 revenue forecast, okay? Now that we know how many clients we need to get in order to get our revenue goal, now we need to figure out what it will take in order to get those clients. So is anyone here running Facebook ads? Oh, lawyers don't like Facebook. Okay, privacy issues. Okay, all right. Anyone in here doing Google ads? Okay, all right. So as you know, with Google, you can increase or decrease your budget. And so in a scenario like this, you would be able to look at historically how you've been performing, how many clients you've generated, and determine your marketing budget off of that if that is your primary source of client acquisition. Okay, this is a variable cost that you have to plan for. All right. Then you have to look at, do you have the staff to accommodate those 20 new clients that you'll get? Are you still doing intake yourself? It might be time to hire intake specialists. So those are things that you want to look at. And then how much will you pay yourself? Are you paying yourself a reasonable compensation? Some people looking down, you guys are not paying yourself a reasonable compensation. You deserve to pay yourself a reasonable compensation because you work hard in your firm. You probably work harder than everyone else. Let's be real. You're there early mornings, late nights, on the weekends, doing networking to bring in the business. So why should you not be paid for your efforts, right? Not to mention the student loans that are, knocking at your door. So let's make sure that we are also, in addition to salaries of everyone else, that we're also incorporating owner compensation in our budget. And then let's make sure that we're also monitoring that we have enough excess to put money away into an emergency fund. And then we want to make sure that we're monitoring cash flow. Now, cash flow and profit are not the same thing. Your profit represents your revenue minus your expenses. Your cash flow represents cash inflow and cash outflow. There are some things that are cash outflow that do not affect your profit and loss, such as repayments of loans, or when you get a loan, or owner's draw. So sometimes people will say, at the beginning of the month, I had $10,000. At the end of the month, I had $10,000. What do you mean I had a profit? Well, on October 2nd, you took out a $5,000 draw. So that's why that $5,000 profit that I told you, you took that out in the owner's draw. That is what we are talking about when we're talking about cash flow monitoring. Now, when we're looking at firms that may have loans, this is very important because sometimes these loans, they seem nice in the beginning, right? They say, oh yeah, we'll give you $80,000 and all you have to do is pay us back $102,000. They try to make it seem nice, but then when you really look at the paperwork, you see that they're giving you a 29% interest rate, which is not ideal. and that they require weekly payments. So from a cash flow perspective, having weekly payments is not ideal. So if you take anything from what I said today, please never take out a loan that requires weekly payments, okay? That will dramatically obliterate cash flow. It's not ideal. We also want to make sure that we're managing the cyclical nature of revenue. Sometimes there are up periods, there are down periods. One strategy is to diversify the types of cases that you have so that we can better manage cash flow, that we're making sure that we're optimizing our operational costs, that we're being lean on periods that are drier than others. Now, I talked a little bit about debt, but I will say there's good debt and there's bad debt. Anytime that you take out debt, you want to look at what will be the return on investment on this debt. Anytime you take out debt for your firm, it should be used to directly invest in something that will help you generate revenue. If you're taking out debt to pay salaries, we're a little too far gone at that point. We're going to get in a cycle where we're just going down, right? Now we need to just revitalize the whole budget and whole cash flow strategy of the firm. So when you take out debt, there's interest. These people don't just give you money for free. Does anybody in here lend out money for free? Okay, I haven't met anyone yet, but I just like to ask just in case. They don't give you the money for free. So in the event that you take out a loan and you have let's say 20% interest on that loan, we want to make sure that we get a 40% return on investment. That's what I like to say. So if you get $100,000 in a loan, we want to make sure that we are using that $100,000 and that we're getting at least a 40% return on investment so we can pay that interest back and have a profit from it. Does that make sense? Can I get a verbal yes if that makes sense? Okay, great. Now, you want to make sure that you're avoiding excess debt because, of course, that can obliterate your cash flow. But my favorite debt has 4 letters. It's called Amex. I love my Amex because it gets me points and I'm able to use those points to purchase flights. And anyone who knows me knows my tagline. I help law firm owners reach new heights and catch more flights. I believe that every law firm owner should take at least 6 vacations a year and pay themselves a 6-figure salary. Okay? If you can agree, let me hear a round of applause if you can give with that. So if you can get approved for business Amex, I would, and they're not paying me to say it, but I would recommend looking into it. Any type of credit card that has some type of reward points on it, I would consider looking at that. Now, let's get to the boring part. This is why I saved it for the end. The essential financial documents for internal relations. So, of course, does anybody still use an old school file cabinet where you have all your files? Oh, wow. I've seen pictures and videos of those things. Okay, so nowadays we use, a lot of firms are using cloud-based. Okay, when we say cloud, we're not talking about the clouds up there, right? We're talking about virtually, like on the computer, right? And so, of course, you have your client files. You may have your client files, but you should also have an internal folder specifically for your firm where you save your internal documents. And so I'm going to quickly go over those documents that you should have saved for you. And I'm going to go over this quickly because I would assume that there's going to be a lot of questions and I want to make sure I have time for questions. So 1, you want to make sure that you have your foundation documents, those being your articles of incorporation or partnership agreements or any other formation documents, your EIN documentation, your business licenses and permits. This is going to be important because when you're working with the CPA and they file your tax return, your formation documents are directly related. How your business is structured is directly related to how we file your taxes. So it is very important that you have this. And then, of course, we have to put the right EIN number, otherwise the tax return will get rejected. So make sure that you have this documentation saved. You want to have your fee agreements and retainer contracts. Make sure that you're clearly detailing the terms of the financial agreement with every client. Make sure that you have all of your invoices and your expense receipts. Okay? So especially with PI attorneys, I see that the financial documents are not organized in a place that makes it easy for me to do what's called after the fact accounting. And so we help a lot of people process years of accounting, and it's easier if you have what's called a financial packet for each case. So that would be, of course, your disbursement sheet or settlement sheet on the cover on the top. Any expenses, so any receipts or expenses so that you paid to vendors, doctors, medical providers, things of that nature. And the actual invoice for billing services. Yes, we know that you're a contingency. Yes, we know that you have a disbursement sheet, but actually having an invoice that said, because this was your settlement, the legal fees are this much. Having all of that together is excellent for your accountant will love you, okay? And if you're ever audited by the bar, that documentation will help that process go by smoothly, okay? But whether you do PI or not, having that type of structure as far as organizing your documents is going to be great, not only for your accountant, but just for you to go back. What if you have a fee dispute or some other type of dispute with the case? You can always go back. Now, from an accounting standpoint, you want to make sure that you're saving your bank statements. So please save your bank statements. And if your bank statements do not print checks on them, print those check images and save those to your internal files as well. You want to save images of checks that you wrote and images of checks that you deposited. Okay? You want to save your general ledger and journals. This is going to be a detailed account of all financial transactions that your accountant can provide to you. This is generated through an accounting software. You want to make sure that you have your profit and loss and balance sheet for every month. And you want to make sure that you have your tax returns and filings and payroll returns and filings. Because here's the reality of the situation. If you leave a provider or you leave a bank, it is a hassle. Has anybody ever tried to get bank statements or checks? Yes. And it was a nightmare, wasn't it? Yes, it is a nightmare to get records from a bank after you have closed an account. So get them now. Get in the habit of saving them at the end of the month now. Okay? If you have any type of internal or external audit reports, you want to make sure that you save those. You save your expense reports. Any type of professional development. So I'm all about catching flights and reaching new heights, right? So I do lawyer retreats and business development events, right? And so if you are one of those that go to those type of events, you want to make sure that you save the documentation and expenses related to those events. Okay, so I say save the flyer, save the listing of the courses and CLEs that you took, all of that. So if you get audited and the IRS says, this $20,000 cruise that you said was personal, it was not business, you can say, actually, here's my documentation to show that it was business development, okay? But let's be real, it's a great way to get a tax-deductible vacation at the same time, right? But if you cover all your bases and you have your documentation, then you'll be good in the event of an audit. And lastly, make sure that you have your property leases and your any type of loan documentation, any type of list of significant assets, including equipment, software, intellectual property, and investment portfolios. All right? That was a lot of information, and I've done a lot of talking, and now we'll turn it to the Q&A session. Awesome.
Thank you kindly. Thank you kindly, Jayden. Great job. So we're going to turn it over to the audience now to ask any questions you may have. We have a group of folks who are joining us virtually, and so we ask you just hold your question. Laura, our wonderful technician here, is running a microphone around, so just ask your question into the mic. I see we had a question right here.
Hello. First of all, thanks for the wonderful presentation. I practice a lot of business law, and I wanted to ask you a question about something that's affecting a lot of businesses. As we got into COVID, I know the Small Business Administration offered a lot of EIDL loans at fixed rate for 30 years at 3.75%. So I have hundreds of clients literally that come to me now and say, hey, we use some of those loans for allowable purposes and converted, we kept our profits and we can pay them off. However, we're not required to. So at that rate of 3.75% a year at fixed rate for 30 years, it's less than the inflation rate right now, at least half of the inflation rate. They're asking for advice. Should we just basically pay off those loans, or should we just carry, monthly payments and just pay them as agreed? And again, that's unprecedented. I don't think we ever had anything like this happen before. So that's been the question of the day, the months, and the year for the last, I'd say 12 months or so. So I just wanted to see your opinion on that.
That's a great question. So the question was, in general, with the EIDL loans, the interest rates are pretty low, about 3.75%. So the question is, do I stretch it out for the full 30 years? Or if we have the excess cash, do we pay it off? And so the question then becomes, when you compare, we have to compare return on investment, right? So we compare interest expense versus if we reinvest that cash to generate more income, what is the return on investment? Most likely, these businesses that have a lot of excess cash, if they reinvest that money into ads or something like that, biz firm development, they're going to be generating a lot more money than the little bit of interest that they have. So in that scenario, I would present the two to the client, and they would most likely go with stretching it out. Mm-hmm. That's a good example of good debt.
Hi. When it comes to emergency savings, does that formula change for a law firm that has $100,000 a month overhead versus $1 million a month overhead?
Oh, absolutely. 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 We're talking about, there's so many different variables as far as you want to make sure that you have, the goal is how many months of savings do we want to make sure that we set aside. Every firm is going to be different. And then we're also looking at, if we don't use savings, what other means do we have to tap into? Do we have a line of credit or anything like that to tap into? So it definitely changes per firm. And then some firms, the risk is so low that the need for a rainy day fund, the need, maybe they don't necessarily need 3 months because the risk is so low. So it changes firm by firm, definitely. Me personally, I'm aggressive. I'm the person that, I'll get it down to $7 in my account, because I just know I have that reoccurring model, right? But I tell clients, do as I say, not as I do.
Thank you.
Hi, I have a question about discounts. How do you recommend that you express that on the bill, like how you explain it, how you put it on the invoice, but also do you keep a line item on the financial statements to track, like, here's how much each year for this year, this quarter, that I've actually given in discounts to clients?
Okay, so let me just repeat the question to make sure I understood it correctly. So I believe you asked, in reference to discounts, one, how do you communicate that to clients? And two, how do you show that line? Do you show that line item on your financial statements? Okay, so one, for my firm personally, we only do loyalty discounts for, like, you referred a client, right? So that's told from day one, right? Or like, I'm not the type of person where somebody comes to me and they say, oh, I can't afford that. Can you lower your price for me? No, you need to make more money. I'm going to give you a strategy to make more money, and then we can just do it at the price. Because if I lower the price just to appease you, then we're both going into resenting this relationship, and that's not healthy, right? So I only do discounts if there's some type of incentive along with that. And then two, yes, discounts are on the P&L. Absolutely, they should be. So when the accountant is preparing your financials, they should be using some type of sales report. They should have access to your Clio so that they can see, how much you actually received and, what those discounts look like. Yeah. If it's material is what we call it. So what I mean by that is, would it make a difference if an investor would look at this financial statement? If you give somebody, if your total revenue over the year is $500,000 and you only gave $50 in discounts, that's immaterial. If your total revenue is $500,000 and you gave $100,000 in discounts, that is material. So that should be reported.
Hi. In QBO, you get a standard chart of accounts, and it includes cost of goods sold, even though it's a service industry, which is difficult. But what accounts do you find are missing and should be included? And what accounts are you like, oh, for goodness sakes, just turn that off?
Oh, that's a great question. So the question is, in QuickBooks Online, which has the largest market saturation for accounting software in the nation, as far as the chart of accounts are concerned, what accounts do I feel like is missing, and what accounts do we just not use? So anytime we're onboarding a new client, usually it's either one of two ways. Either they usually already have their chart of accounts set up, or they're brand new and we first use the chart of accounts that QuickBooks has set by lawyers, and then we have to customize it. QuickBooks Online is not set up for law firms that have trust accounts, meaning if you have, it doesn't understand trust account liabilities. So there's something called double entry accounting that has to happen every time a transaction happens with a trust account. So when you move money from your trust account to your operating account, we then have to recognize revenue, and then we have to lower the sub account for that specific trust account for that specific client, right? And so by default, we have to create sub accounts. So you might have one trust bank account, but you really have a bunch of trust accounts. For every active matter that you have, every active client that has money in your trust account really should have a sub account in your trust account. And so we have to create that, and so that every month we can balance it and do a three-way reconciliation. And so to me, that's the easiest way for me to see when somebody's books are not in order. And then when it comes to income, depending on where the firm is revenue-wise and growth-wise, sometimes I like to shift from just the general legal fee income and separate it out by, are we doing will income, trust income, so that we can monitor those revenue centers, as we like to call it, so we know where we need to focus our efforts going forward as we grow and scale this firm.
Thank you. Yeah, great presentation. I had a question about like budgeting and forecasting. Yeah, as a firm that does a lot of hourly work, but then also a decent amount of contingency work and flat fee work, how aggressive should you be in budgeting versus conservative? Because like COVID, for example, all of a sudden we had 2 years where we didn't have a jury trial and couldn't, in all of those contingency fee cases that usually would kind of come in dips and valleys every year or so, just gone for 3 years. Should you really just budget on, like for a firm that does a little bit of everything, should you really just budget on hourly only and kind of treat that as candy, like those cases that might come in a year from now, 2 years from now? Or do you think it would be better to kind of get aggressive, and then if you don't get that maybe right away, that could be some of the good debt you're talking about, I guess?
What areas of law do you practice?
We do family law, we do civil litigation, condemnation, personal injury, wills and estates, landlord-tenant. We do it all.
I mean, is this something that you don't? I should have asked what you don't do. Okay. Okay, so how many attorneys do you have?
4.
Okay. So no, you should not budget for hourly work only. You should have somewhere, whether it's a spreadsheet or somewhere where you have all of your active matters and you could be able to estimate when these matters will close. So all of your personal injury matters, you should be able to estimate the average, like how long it takes to close these cases. How long does it take to close a MVA case or a trucking case? And then you can kind of estimate, that's why I say 12 weeks, just do a quarter, right? Will it close in this quarter or will it not? Okay, if not, then we're not even going to consider it, okay? So that's how you handle that. The civil, that's up in the air, right? That could go for years. So if you don't see that closing in the next 90 days, don't consider that. The hourly, it's much easier to estimate. I think we were on the same page with that. But the contingency, we definitely should be looking at estimating and using that in our budget as well. And you should also be looking at, not telling you what to do, but just an idea. Maybe there's certain areas of your firm that aren't as profitable as others. So maybe there are certain areas that should get more of the focus, or each attorney, so we have 1, 2, 3, 4, each attorney is leading a team and you're responsible for making the PI practice profitable. You're responsible for making the family law practice profitable. You're responsible for making the civil that's another option. So you have to juggle those two. Have fun with that. Give me a call if you ever want to just, over happy hour.
Great presentation. How should the accounting or reporting practices differ for a firm who's looking to apply for large funding to, for example, to purchase a commercial space where the bank is looking for you to show profits? How should our accounting or our reporting practices look differently if we're not necessarily looking to reduce our tax liability, but to show greater profits?
Great question. So the question was, how should the reporting be different for a firm that needs to show a greater profit for lending purposes? Maybe they're looking to grow to buy a commercial property or things of that nature. So with that, you're going to get less aggressive with your expenses. We will never over-report income. So that's fraud, right? So we're not going to do that. So what we're going to do is just get less aggressive with the expenses. So we earlier talked about those professional development expenses that are technically tax deductible. So my travel budget for the year is at least $50,000 for me to travel to various different conferences and things of that nature. If I needed to show more of a profit, I would pay for that on my personal Amex versus the business Amex, so that the firm doesn't have that travel expense line item. I'm still getting the points. The firm is showing more of a profit, and we're good to go. Another way is there are expenses that are backed out, such as depreciation and meals, sometimes depending on the banking institution. So but you have to work with this. Like, people think I'm only going to talk to my CPA or tax preparer. If you're a firm owner, you need who's growing and scaling. Just like you tell your clients work with a professional, you should be working with a professional, right? So you have to work with the CPA that's going to be holistically working with you throughout the year to meet your goals. And sometimes it takes planning and starting a year beforehand.
Well, folks, I think that's all the time we have today. So again, thank you so much, Jayden, for a fabulous presentation. I saw there were a few other questions in the room. I've seen you plenty at the networking events. Can folks still find you for the rest of the afternoon and talk with you?
Yes, I will be here for sure. I'll be downstairs in the lounge area. I do have to do the interview.
Right.
For a podcast interview, and then I'll be downstairs to answer whatever questions you need.
Well, thank you kindly.
All
Thanks,
right.
folks.